Hello, in this video we want to solve this question. This question is from the topics National Income Accounting. National Income Accounting Macroeconomics. In a hypothetical economy, GDP equals to 6,000. Gross investment equals to 800. Net investment equals to 200. Consumption equals to 4,000. Government purchase of goods and services 1100. Government budget surplus is 30. Find out the values of NDP, net exports, government taxes minus transfer, disposable personal income, personal savings. Now what is NDP? NDP is net domestic product. Net domestic product is GDP minus depreciation of capital. Depreciation of capital. Depreciation of capital, how to calculate? Gross investment minus net investment is depreciation of capital. Depreciation of capital equals to gross investment minus net investment. What is the value of gross investment? This is 800 and net investment is 200. Gross investment is 800, net investment is 200. Therefore, depreciation of capital is 800 minus 200. This is 600. Therefore, NDP equals to GDP. What is the value of GDP? 6,000. 6,000 minus 600. If we subtract, we get 5400. This is the value of NDP. This is the value of NDP. Now we calculate the value of net export. Value of net exports. How to calculate net exports? We know in a national income accounting, Y equals to C plus I plus G plus NX. What is Y? Y is GDP. Y is GDP is 6,000. Consumption, C is consumption expenditure. This is 4,000. Investment, this is gross investment. Gross investment is 800. Here we consider GDP. GDP is the gross domestic value. Since we consider here GDP, therefore we consider here gross investment. Gross investment is 800. Then G is the government purchase of goods and services. Government purchase of goods and services is 1100. 1100 plus net export. We just calculate and solve. This is 9 and 4 plus 5, that is 5900 NX. NX is net export and 6,000. Therefore, NX equals to 6,000 minus 5,900, that is 100. Net export denoted by NX. NX is 100. This is the answer of net exports. Now we calculate government taxes minus transfer. Budget surplus. For this we use the concept budget surplus and the government purchase of goods and services. Now what is budget surplus? Budget surplus is government taxes minus transfer. Budget surplus is government taxes minus transfer. Government taxes minus transfer. This is transfer, means transfer payment. Transfer minus government purchase of goods and services minus government purchase of goods and services. Goods and services. What is budget surplus? Budget surplus is 30. Government taxes minus transfer. Government taxes minus transfer minus government purchase of goods and services. This is 1100. Therefore, government taxes minus transfer is 1100, comes on the left hand side. 1100 plus 30, that is 1130 or 1130. Therefore, government taxes minus transfer is 1100 plus 30 equals to 1130. 1130. This is the answer of this part, that government taxes minus transfer. Now we do personal disposable income. How to calculate personal disposable income? Personal disposable income is GDP minus government taxes minus transfer. Government taxes minus transfer we have already calculated. This is 1130. Now we calculate disposable personal income. Disposable personal income is GDP minus government taxes minus transfer. Government taxes minus transfer. GDP is given as 6000 and government taxes minus transfer is 1130. 1130. This is 6000 minus 1130. This becomes 07. This is 98 and this becomes 5. Therefore 4870. This is the disposable personal income. Disposable personal income is 4870. This is the answer of this part. Now we calculate personal savings. Personal savings. What is personal savings? Disposable personal income minus consumption. Disposable personal income minus consumption. Disposable personal income is 4870 and consumption is 4000. If we subtract, we get 870. Personal savings is 870. This is the answer of the last part. We have done all: NDP, net export, government taxes minus transfer, disposable personal income and personal saving. I hope everybody understood the solution of this question. That's it for this video. Thank you.